All eyes are on the Fed Chair Powell speech tomorrow, but today we do have a slew of economic data, including the initial jobless claims, existing home sales, S&P Global, flash manufacturing estimates, and service estimates. So it's not without its opportunities. I'll go through the technicals that are driving the three major currency pairs: the euro versus U.S. dollar and sterling versus U.S. dollar. A little change, but the dollar versus yen is higher after moving lower yesterday in what has been a pattern of ups and downs in the foreign exchange market. Let's get started. Looking at the euro versus US dollar on the hourly chart, the ups and downs that I speak of can be easily seen through this type of price action intraday and over days. What we can say is that the ranges have become a little bit more narrow, and certain technical levels are finding some interest. For instance, if you take a look at the price action here yesterday, the price came up toward the 200 and 100 hour moving averages, and although the price moved above it just a little, you could see that the momentum to the upside faded not once but twice and rotated back to the downside. In trading here today, when the price approached those moving averages, instead we found the early sellers. Why? Because fool me once, shame on you; fool me twice, shame on you; fool me three times, and I'm not going to buy that thing. So sellers leaned against that level. If the price ahead of that level, we saw a rotation back to the downside. On the downside, we have this yellow area right here between the 50% retracement, which includes a 50% retracement, and then all these other swing levels that defined swing lows or swing highs through this area right through here, and here, and back here. You get the point where the market paid attention to these levels, and more specifically in these areas right through here. And our low price that we saw in trading here today came down toward the low price that we saw from yesterday and found willing buyers that pushed the price to the upside. So if I were to define the bookends, the resistance, it would be right here and near the 1.1666 level, and right here at the 1.16098 level. So that's only about 56 pips. Not a lot of movement, but it defines a range, and what traders look for is a break to the upside or a break to the downside. And if so, we move toward the next levels, including there, and then the high price right here. That would be the next targets on the top side. And downside, we really don't have a lot until, well, I guess this low right here from a few weeks ago, and then the 38.2% retracement, the broken 38.2% retracement moved down for the July high to the July or August 1st low. That level has remained broken, given a somewhat more bullish bias. We're also above the 50% retracement, but anyway, that would be a target on the downside. Let's take a look at the dollar versus yen next. Look at the hourly chart. And I mentioned yesterday we moved to the downside. Actually, the last 2 days, prior 2 days, we moved to the downside. But now we're seeing a rotation back to the upside, erasing nearly all the 2-day decline. We do have work to do on the top side if the buyers are going to take more control. In particular, we need to get back above the 38.2% retracement. That's this level right here. In trading, not yesterday, but the day before, on Tuesday, the price did move above that 38.2% retracement, giving the buyers a little bit of hope. But the the swing area right through here could not be broken. And what do? We gave up. We rotated back to the downside, and we upped and downed our way lower over the next 2 days to our low price that we saw in trading yesterday, which, by the way, came ahead of this swing area right through here. The move back to the upside initially did find resistance near the 100 and 200 hour moving average, like you do. But when we broke above, or when we first based against the lower moving average, the 100-hour moving average here, that was a clue for let's go for the upside. And now we're looking toward the 38.2% retracement, right near the natural level at 148. Above that 148.16, get above that level, and we look toward the 50% retracement, the high price that we saw from a few weeks ago. Finally, let's take a look at the sterling versus US dollar. Again, we'll look at the hourly chart. The price traded higher yesterday into the 200-hour moving average, found resistance sellers against that level. Both those moving averages are now converged near the same level. So on the top side, that would be a target to get toward. But on the move to the downside, we did see a stalling near the low of this swing area in trading here today. We did extend to the downside, but could not get get below even this minor level right through here, which I just had outlined as a low right here, a high right here, break to the upside right there. That was it. It's nothing in particular, but it was a level ahead of the 100-day moving average. Ultimately, if the price is going to go lower, we need to get below that level. We also need to get below the 100-day moving average and start to look toward the broken 38.2. That's the targets on the downside. Now, if we do find support within this area and trading here today, we are below 50%. That's a little more bearish, but we do get above those levels. Then we'll look toward the convergence of the two moving averages up through here as resistance. So be aware of that. But overall, you just have to be nimble. You have to be quick. You have to be able to look for your target levels, look for the technical levels that you want to be patient at. And if it works, it works. If it doesn't, get out and live another day. It's a trader's market right now. We'll wait for the data today to see if it gives us any clues. But the key event will be Fed Chair Powell's speech tomorrow, 10 a.m. So be aware, be prepared. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.